Howdy, howdy, howdy. Welcome to Shoulder Tap. I'm Jack, joined by one of our stable of risk managers, my favorite, Mr. Brett. How's your day going so far, Brett?
Day is going well, Jack. Thanks so much for the nice introduction. And it's busy, and we're seeing some things on the board. Some traders with profitability. There's probably a little bit more in losses going on right now, which we'd love to see get turned around. But it's a good day.
Yeah. Well, just a reminder to our traders out there, we are T minus 1 hour until the FOMC release, and then at 1:30, Jerome Daddy Powell will be talking. We will be covering that live, which means that after Shoulder Tap, we're going to do an abbreviated coaching with Robert so we can get on at 12:50 and start getting ready for that FOMC number. Brett, FOMC day, CPI day, lots moving in the market. How are our traders doing this morning so far?
Like I said, we've seen some losses that are a little bit greater than usual, and would love to see some profitability. And we have seen some out of a few traders. Dakota, as usual, is a bit of a wild card, and Dakota is up just shy of 11 grand today. And actually, one thing that I wanted to mention regarding Dakota is I had to reach out to him right at 309 yesterday because he was in a big position. And I basically, in all caps, told him I don't want to have to hit the market at an e-liquid time where there's not a lot of bids and offers with a good size of contracts and take a big loss. He still had a great day yesterday, booking 15,000 on the day, but really would have liked to have seen that not happen the way that it did, because it cost at least a few dollars. I think about $3,000 when market hit for end of trading that Topstep has at 3:10 p.m. Central Time.
Yeah, remember, by the way, it's a great thing that we do auto liquidate you. So, you're safe there. But we're not trying to get you the best price. We're trying to get you the F out, right? So, to all my folks out there in the club DLL, still love y'all, but try and get out of your own positions before we have to send it, so to speak. It'll be nicer on your P&L.
Absolutely. Well, thanks for saying that, Jack. And yes, it's not that the risk management team is putting in those orders or anything. We do have some automated processes in place to protect you, the trader, from possibly taking home a position and exposing yourself to more risk in a trade than maybe is originally intended, hopefully preventing losses or at least avoiding overexposure to the markets when they are in a closed state.
Yeah.
Um,
I'd like to add on that too is, we can't we really can't discretionarily be discretionary trading your account. I mean, we just got to hit the market because we're not going to sit there at your account and be like, oh, let's play around with it and then explain to you how we lost more by trying to trade your account. That would be silly town.
yeah, and not only that, Jack. When I was with the brokerage firm that I worked for a while ago, they had to do the same thing. When you liquidate a trader's position, you hit the market, even though it can be painful, and oftentimes they can be big positions. When the brokerage firm that I was at was professional traders primarily that did it full time, and so it's painful to see a big position just sweep a market possibly.
Yeah. Maybe before we get to the cards, Dan Trader asks a serious question. If a live account has enough maintenance margin, why can't a position be held overnight? You know, Here's the thing is we have a lot of traders here, and I feel like the number of traders that have, I mean, off the top of your head, Brett, what's the maintenance margin on like an ES? it's got to be what for a single contract. We're at 5,000 something. Somebody can look this up
Man,
for it, but it's 10K. Let me.
yeah, I never took stuff home, so it's at least a few $1,000s, and
It's
it
more than that
depends
now.
heavily. Yeah, that's true too. It depends heavily on your account balances as well and your relationship to the brokerage, because there are CME minimums, and then there's some FCMs or brokerage houses have higher than CME minimums, but there are some requirements for regulatory reasons that there are minimums set by the exchange.
Yeah, I mean they're big numbers, so like it would only apply. I mean, it would only be a few contracts someone has, and it'd be very hard on our system to make those adjustments. But we'll take it under consideration. But thanks for that question, Dan, because that's a good one. All right, with that, Brent,
Absolutely.
what do you say we get to the old cards? We got a few today.
Yeah, let's dive into them. And I did want to say, caught Fatima's segment, and that was a great segment that she had with a lot of insight in trading and attitudes towards the trading, and just how she does it. And it's something that she really hated that I'm going to try to highlight with some of these trading cards is when the going gets tough, limit the losses. Tighten up that
Hmm.
personal loss limit, tighten up that individual trade loss limit. And that's the way to turn the tides. Um, Speaking of that, the first trader that I want to highlight is Chen. And Chen was in a 100K LFA live funded account, and he lost it later last week. And one thing that stood out to me with was Chen tightened up their trading, but it was a little bit too late, which almost any trader, when whether within Topstep, a personal account or otherwise, is nearing that balance that is kind of do or die. Generally, trading tightens up, but a lot of times it is just too late, which is why you want to do it before you're truly uncomfortable and almost forced to do so.
Hmm. Yeah, I see that in the report. Chen had a really rough 5-day losing streak to start. And what's a little bit, a place for improvement would be it looks like they did the first 3 days exactly what I think best practice would be to do. The losses kept going. They were all losers, but they were cutting it at a pretty good clip. But I think the big sort of faux pas here was on the fourth day, then had their biggest loser, like bigger than the first day. So I admire Chen for trying to dig out of the hole, but it seems that that would have been a pretty tall order after those first 5 days in there.
Yeah, exactly. And actually, at the end, Chen did something that the risk team recommends to a lot of traders when they call in asking for increased daily loss limits on the account that they're struggling in. And oftentimes, the recommendation is to do just the opposite and tighten it up, switch to the micros, which Chen, hats off to you on that. You did exclusively switch to the micros for about the last month of your live funded account. Um, Couple things that stood out to me in the trade report was average daily P&L was, and actually I think that card should have a negative 236 on it instead of positive, but it is a negative 236 average daily P&L, and a lot of that is made up of those first 4 days of trading in the account where there were losses exceeding or near $1,000. Um,
Hmm.
but the at what the trade did slow down. Um, And the recommendation that I would have for Chen is you've got some trading combines right now that you're trading. Treat them just the same as you would your live funded account. And it's a difficult thing to do because it is different whether you like it or not. But if you can get that mentality that it is no different, that's the way that you learn and grow and gain really good experience in the markets and as a trader that is seeking profitability.
I think that a good takeaway for this, for everyone, would be when you're thinking about what your DLL, if you want to be really dial that in, it should be a percent of what you can lose total, right? So just numbers to make sense. Let's say you have 10K in the account and your day one loss limit is 1,000. Okay, you lose 1,000 the first day. Let's just use the same percent. Next day, you have 10% of 9,000. Okay, you lose again, you lose 900. What I'm saying is that if you use a percent like that, eventually, when you're at 5,000, your limit's going to be 500. It's going to keep you in the game much longer. You can't just have a static, especially when you're losing money, a loss limit that you just keep hitting again and again and again. You got to tighten it up. So that would be my advice for y'all out there.
Yeah. And in addition to that, another way to tighten it up on top of that is switching to a micro contract or a smaller contract that has a smaller tick size. The third trader, actually, I'm gonna highlight is I do kind of touch on that personal loss, or I will be touching on that personal loss limit and how it could have changed some of the aspects for them. Um, but that's what I've got for Chen. Um, Trade
All
well
right. Well,
in your trading combines, treat them seriously, and yeah, we can. Why don't we move on to Shreven? In unless you have anything further for Chen.
no, let's do it.
And I think I mispronounced that. It's Shervin, I believe. Um, Shervin has been trading gold, Nasdaq, the S&Ps, and has definitely built up their live funded account. It's a 150K live funded account. Average daily P&L is $80, which hey, you're on the right side of zero. And the only thing I would say about it is the swings are a little bit too big for $80 of profitability on the day. A large portion of the profits in this account from a single trading day. And that's not something that we necessarily want to see or strive for as a trader. We want that consistency and reduce and getting it consistent is the key to success where you're not a home run hitter. You're going for those small profits on a day-to-day basis.
I'm interested in looking back. I see the big day in question appears to be on May 20th. Hold on for one moment here. I got to see what was going on May 20th. If
While you're
anyone
looking
knows,
at that, oh, go ahead.
Go ahead, Brett.
Well, while you're looking at that, one thing that Shervin did fantastic with was limiting the losses. It is one of the biggest strengths that Shervin has, as those losses in the account, um, the average profitable trade, and again, a lot of this is comprised of that one trading day, but the average winning trade was just shy of 1,300. The average losing trade was just shy of $340. Um, but the winning day percentage and winning trade percentage at 27% had unfortunately wiped out a lot of that.
Yeah, there's very few trades in general. A lot of these one trade per day. The big day was two trades. What I'm seeing, my guess is May 20th is a rather unexceptional day, except, and I think I might have just stumbled upon their strategy. Uh, it never went below the open. So, like, I think they just bought the dead ass low, as Hogue would say at the beginning, and held that trade for Yep, 3 hours and 12 minutes. All right. Well, yeah, I would say this is something that you're on the right side of the P&L, and they have taken a payout, right? Close to $5,000. Um, but this looks like a little bit more speculation than you want, as you mentioned earlier, Brett, when you only have an $80 average P&L.
Yeah. And in addition to that, you're trading three highly volatile markets. You've got gold, you've got the Nasdaq, and the S&Ps. And my recommendation to any trader trying to grow as a trader and gain experience is focus on one. Get some consistency on one product. And that way you can build it to other products potentially, or you may find that it works well in that one product set and stick with that.
Absolutely. All right. Well, Shervin, by the way, I won't say it live, but if Shervin, if you're watching, I love your last name. Very cool. All right. Who do we got left here?
The last trader that we're highlighting today is Derek. And Derek is in a 50K XFA account. And the reason I chose Derek to feature today for the shoulder tap is it really exemplifies how those daily loss limits and personal loss limits can really positively impact your account balances, even if you're frequently hitting them. Derek has a 31% winning day average, which by all accounts isn't really that great, but it's been adding up for him. He's got a healthy account balance and a 45% winning trade average. But the thing that stands out to me is the intraday P&L high and low. The
Hmm.
intraday P&L high and low is 1600 to the good side, 600 to the bad side. And I had mentioned that trailing personal loss limit earlier. If Derek had a $500 trailing personal loss limit, he'd have about 6,000 more dollars in this account due to the fact that almost every losing day is a daily loss limit of $1,000. But that daily loss limit has kind of saved him or saved this account for him so that he can trade tomorrow and try it again the next day.
I think that you're 100% right. Unlike Shen, Derek was fortunate enough to get started hot in this account with a big day. You're 100% right. Out of 10 losing days, 9 of 10 are the DLL. So this is a firm member of the club DLL, which I respect because in this case, if your average winning day is between 4 and 5 times your losing day, that gives you a lot of flexibility as far as what you could do with that. And he is consistently putting up, I see here close to 4,000, 4,000, 7,000, 7,500, another 7,000. Like you can hit the loss limit then with some frequency. So there's probably some conviction here. Good number of trades. Yeah, I'm totally fine with them hitting it. But if it wasn't there, Derek, if you're in the chat, maybe just I think it's benefiting them for sure because I think we'd see some losing days on par with those winning days. Definitely.
Yeah. And one thing that stood out to me, if you notice those trade times, Jack, they let their winners keep going. And that's how I think those days that are high profitability have grown to what they are. The one thing that you can be at risk of in letting the winners just keep going and going can be sometimes they turn into losers or go back to zero. That can be a really frustrating thing. And managing a winning trade for some can, and I'm not saying anything about Derek. I know from my personal experience, managing a winning trade can be just as or more difficult than managing a loser because there is kind of no hard stop in that if you hit this number, you're stopping for the day. it's somewhat of a judgment call. But if you can set that trailing loss limit on intraday trades or individual trades, ultimately, I think a lot of traders will benefit from that and find more success trading their accounts.
Well put, Brett. Well put there. Well, those are our three cards for today. We can see if there's any questions, but we also might want to end a little bit like closer to now today, just because we have an abbreviated group coaching. Because once again, if you did not know, you know now, is that 1 p.m. the FOMC statement comes out. They're not going to change rates, but there's all sorts of divining of the individual words in there that is surely going to move markets. And then Powell's coming at 1:30. We're going to be all over that. Brett, anything else you want to throw out there before we pack it up and head back to the green room?
I mean, it's not going to be anything new or novel, but really keep it small. We've got a high volatility event. We've seen traders in the past week really get hurt on some of these numbers in the express funded accounts, in the live funded accounts. Keep it small. My recommendation and what I always did was I went into these economic events flat and with no position, no orders, and then maybe a few seconds, maybe even a minute or two based on the conditions, I would then enter the market only after I could kind of get a grasp on it, because I'm not the objective not to throw darts. It's to be
Mm-hmm.
precise with what you're doing. And these high volatility events are the time that is most important.
Well, we traded bonds, and there was only a few things that we were ordered to be flat for. We could take smaller positions through unemployment. CPI didn't matter then because interest rates were 1% or whatever else. Um, However, the Fed announcements were one thing where it was you're absolutely flat, especially since this was during the period where they were doing, things like Operation Twist, quantitative easing, things like that. You could lose more money on a position during the Fed than anything else. The other one was individual products for bond auctions. Like you weren't allowed to take 30 years through a bond auction or something like that. But the Fed is huge. You don't want to be gambling on that. And if you got to do it, I almost I almost don't want to wish you luck because it'll burn you worse when you do it the second time, but just make it a very small position, all right? Okay. Well, with that, Brett, thank you for sharing our traders today. Let's get pumped up for Powell. We're going to do a little group coaching with the Riz and JD right after we take a quick break. We'll see you on the other side.